Hey everyone, welcome to today's podcast where we're going to discuss about how much it takes to begin trading in the world of Forex. So a common misconception people have when it comes to trading is that, it requires you to have a lot of money, right? It requires you to have a large account size, right? You must be fully ready with a trading strategy that you have back tested and forward tested 100 times on a demo account before you can begin trading. But that can be further from the truth, all right? So the thing with Forex trading, one of the first things that I want to talk about is actually when it comes to Forex trading, a lot of people choose to begin with a demo account. Now, there's nothing wrong with a demo account. Don't get me wrong. I believe a demo account is good for certain kind of situations. For example, a demo account is pretty good, when you are unfamiliar with the trading platform. For example, you're unfamiliar with MetaTrader 4, right? Demo account is very good for you to try out the different orders, right? Get a buy order, get a sell order, play around the stop losses, the take profit, the sell limits and buy limits. Kind of get a hang of it. So if you want to make your careless mistakes, platform mistakes, right? Demo account is great for that. However, what a demo account is not so good for, rather, is when it comes to practicing your trading strategies, right? It is good to observe your trading strategies there. You can use it to maybe back test it a bit. But when it comes to actually executing on the trading strategy, the reason why a demo account might not be the best choice is because it actually it gives you this false sense of security. It puts you in this psychology, right? This mental state where you are unafraid to lose money, right? A lot of the usual downfalls that psychological downfalls that live traders have, right? You don't experience it in a demo trading environment. For example, when it comes to revenge trading, right? Revenge trading can only be triggered, right? Can only be triggered when you get all excited. Or not really excited, but when your emotions get you get very emotionally charged that you've lost money, right? And then you go into state of chasing up and getting bigger and bigger and bigger positions just to chase that loss that you had, right? So that is very common with real money, right? Because people see see themselves lose that $100, lose that $200, and they get emotionally charged and they begin chasing that loss. But you don't get that. You don't get that with a demo account, right? Demo account, you just see yourself, take a few hits, lose the $100, lose that $200, and you go like, whatever, right? I can just go and reopen another demo account. I won't feel I won't feel the pinch, right? So that's one of the downfalls of demo account. It puts you in this psychological state where you feel very safe, and many of the problems that you experience on live account, you don't feel it, right? Another example is when it comes to stop loss, moving your stop loss, right? So when it comes to live accounts, one of the the biggest downfalls, right, with people who trade live accounts is that they tend to move their stop loss further and further away, right? As the market moves against them. Right, so their market's approaching a stop loss, they panic, they push it a little bit further, right? All of it is because they are emotionally charged. They don't want to get the loss, they don't want to take the loss, right? And this doesn't happen with a demo account, because when it comes to a demo account, right, you don't feel that the emotion attached to the trade, right? So once again, it puts you in a very I would say a little bit of a fake environment, that you can't really get the real emotions of having a live trading account. So then it goes to the next question, right? So all right, so we established that having a live trading account is important, but how big of a live trading account do you need, right? The good thing, I guess, about Forex, right, and especially about Forex and trading CFDs, is that you have a pretty good leverage, right? You're offered decent leverage. For example, IronFX offers great leverage when it comes to trading Forex, right? And with that leverage, actually, what you can do is you can start trading with a lot less, right? Compared to trading shares, in a stock exchange, right? You want to buy, one share of Facebook, right? You must pay the full price, $200. I'm not sure, right? You need to pay the full price of that. However, when you want to buy Facebook, for example, Facebook CFD, right, you only need to pay a portion of that, actually a much smaller amount. I think it's only your capital that you need is probably only 5% of that. All right. So without going into the little nitty gritty details, right, one of the key things, I guess, when it comes to live trading with that we want to debunk is that you don't need a lot of money to begin trading, right? Having a small amount of money is fine, especially when you're trading CFDs. Okay. So we've more or less established that, all right, we don't, it doesn't take a lot to get started in, live trading of CFDs, but that still does not answer the question that how much should you actually begin trading with, right? My recommendation, right, is actually just trade with enough that you feel a small little pinch every time you lose a trade, right? So for example, if you most people, right, might prefer a trade with maybe $100 in their account or $1,000 in their account. They lose 1% of that. That's $10, right? It hurts a bit, but it will not kill them, right? It will not put them. It will not put them into a state of financial difficulty, right? If they lose a couple of trades, right? And one good consideration is that if you blow the entire account, it will hurt a bit, but it will not hurt that much. Right, that means blowing $100 account, blowing $1,000 account, depending on the income that you have, you would feel the pinch, right? But it should not compromise, you putting food on the table, you living your day-to-day life, right? Don't put all the savings that you have into it. Why I recommend this is because if you can do it with $100, you can do it for $1,000. You can do it with $10,000. You can do it with $100,000. But if you can't do it, you can't trade profitably with a $1,000 account, don't expect to magically be able to trade more profitably with a $10,000 account or a $100,000 account, right? So the important thing is that you want to build your foundation, right? Prove to yourself, prove to the market that you can trade profitably with a small account, and then you scale up, right? Because all you need to do, right, technically, adopting the same strategy and same risk management is just scaling up your lot size. So if you're taking 0.1 lots for your trading strategies with a $1,000 account, right? And you go to a $10,000 account, you just need to scale it up 10 times, right? So 0.1 become 1 lot, right? So that is the approach. But always remember, if you can't do it with a $1,000 account, don't expect yourself to trade profitably with a $10,000 account. So start small. And the reason why you should start small, I'm a firm believer that you will learn a lot more in your trading. You will benefit your trading a lot more by starting with a $1,000 small account versus a $100,000 demo account. Because the demo account, you're not getting the same kind of psychological warfare with trading, right? You're not getting the same, you don't panic, you don't break out in cold sweat when your trades are going against you, right? You don't stay up at night, thinking whether your trades are going to hit profit or not. Don't wake up in the middle of the night and thinking like, oh man, did my trade hit its profit target or not, right? Did I get stopped out? You don't get that with a live account. No, you don't get that with a demo account. You get a lot of that with a live account, because even me myself, years and years in this trading industry, I still get it, right? The feeling of waking up in the middle of the night or having a dream that whether your trade hit its profit target or got stopped out, that is what live trading can do to you, right? Of course, the bigger your account size, the more the better you need to prepare your psyche, right? Or rather your mental state when it comes to trading, right? So it's just like when it comes to swimming, right? You swim in the shallow pool first if you just start out in swimming, right? And as you get better, you work your way to deeper parts of the pool, further away from the sides of the pool, right? Swim a little bit faster, try a little bit more funny stuff, right? But if you're just starting out, you don't jump straight into the deep end, right? You might drown, right? So if there's one concluding statement I want to share about this podcast is that for demo accounts, right, use it to make your platform mistakes, right? Try everything. Pretend that you're taking your live account. You're trading your strategy, right? Make the mistakes there. It's like, oh, okay, I did not know that I can close off a partial trade over here. I didn't know that buy limit means this, sell limit means that. buy stop, sell stop, different kind of trading strategies, right? The lot size, how you adjust it, right? Play around with the different indicators that might come with your strategy, maybe even the different expert advisors, right? Put it on the demo account, see if it's, kind of messes up anything. If everything runs smoothly, then move over to a small live account first, not massive one, just a small one to get your feet wet, right? And observe observe how it changes your approach to trading, observe your trading mentality, psychology, right? And when you are comfortable, then you slowly start to scale up, increase your account size bit by bit. All right. So anyway, guys, thank you so much for listening to this exclusive podcast from IronFX. Until we meet again next time, stay safe, trade safe, and peace out, guys.